Today, we're diving deep into the economic outlook for 2026 across Sub-Saharan Africa's major economies: Nigeria, South Africa, Kenya, Ethiopia, Ghana, Uganda, and Tanzania. We'll explore the growth rate of these countries and the key sectors driving their economies. From Nigeria's steady diversification away from oil to South Africa's structural reforms, Kenya's resilient private sector, Ethiopia's rapid expansion, Ghana's stabilizing macroeconomics, and Tanzania's robust infrastructure-led growth. 2026 promises to be an exciting year for Africa's economic landscape. Kenya's economic outlook for 2026. The World Bank projects that Kenya's real GDP will expand by approximately 4.9% in 2026, up from about 4.7% to 4.8% in prior years, reflecting a gradual strengthening of economic activity. IMF data also point to a similar outlook, with growth in the mid to high 4% range, about 4.9% in 2026, thanks to resilient services and agriculture sectors. Some private analysts and market forecasts see a slightly stronger performance, 5.2% to 5.5%, if business activity, credit growth, and exports improve markedly. Consensus forecasts from major think tanks and financial institutions suggest Kenya will grow at approximately 5.0% in 2026, exceeding the approximately 4.1% regional average in Sub-Saharan Africa. Bottom line, Kenya's 2026 GDP growth is widely expected to be around approximately 4.9% to 5.5%, indicating solid expansion ahead above many regional peers. Here are the key economic drivers. Private sector activity. Business conditions have strengthened, with recent surveys showing private sector expansion at multi-year highs, which supports investment and production. Agriculture and exports. Agriculture remains a backbone of growth, and agricultural exports, especially horticulture, are expected to rebound, boosting foreign earnings. Services and technology. The services sector, including ICT and finance, continues to be a key growth engine, supported by Kenya's innovative digital ecosystem and mobile finance penetration. Monetary policy support. Accommodative monetary policy and falling credit costs are expected to lower business financing costs and support lending around 2026. Investment and structural reform. Ongoing reforms under Kenya's bottom-up economic transformation agenda and Vision 2030 prioritization are aimed at improving productivity and unlocking growth across sectors. Inflation and macro stability. Inflation is expected to remain around approximately 5%, well within the central bank's target range, 2.5% to 7.5%, helping stabilize consumer prices and encourage spending. A stable exchange rate and healthier foreign exchange reserves contribute to macroeconomic stability. Nigeria's economic outlook for 2026. The International Monetary Fund, IMF, now projects that Nigeria's real GDP will grow by about 4.4% in 2026, revised upward from earlier forecasts as macroeconomic conditions and reforms gain traction. The World Bank similarly forecasts 4.4% growth in both 2026 and 2027, calling it the fastest pace in over a decade if achieved. Some domestic analysts, e.g. NESG, put the outlook even higher, around 5.5% for 2026, although this is more optimistic than external forecasts. Most credible forecasts place Nigeria's growth around 4.4% in 2026, with the range generally between 4% and 5.5%, depending on the model and assumptions used. Here's what drives the growth. Structural reforms, including fiscal coordination, tax system improvements, and monetary policy stability, are helping to bolster confidence and support activity. Services, especially finance, telecoms, trade, are expected to remain a strong engine of growth. Agriculture is projected to rebound, contributing more to GDP after prior slowdowns. Non-oil industry and infrastructure investment could see modest strengthening, reducing overdependence on oil and energy. Although oil still dominates export revenue and foreign exchange, improved production and diversified energy output, including gas, support fiscal stability. Tanzania's economic outlook for 2026. Tanzania's economy is widely projected to grow at around approximately 6.0% to 6.3% in 2026, placing it among the faster-growing economies in East Africa. The International Monetary Fund, IMF, projects Tanzania's real GDP expansion at about 6.3% in 2026, supported by broad-based activity and macroeconomic stability. The World Bank forecasts growth of around 6.2% in 2026, higher than several regional peers like Kenya, reflecting ongoing momentum across sectors. Government data and national planning figures support a similar outlook of approximately 6.1% growth for 2026. Tanzania's real GDP growth in 2026 is expected to be solid, steady, and above the Sub-Saharan Africa average, consistent with several international assessments. Here are the key growth drivers in 2026. Infrastructure and investment. Public and private investment in transport, energy, and construction continues to underpin growth. Road, rail, and utility projects are expanding economic capacity and connectivity. Agriculture and natural resources. Agriculture remains a major contributor to growth, and mining, especially gold, is a key export earning sector, supporting output gains. Services and tourism. Services, particularly tourism, finance, and ICT, are expanding, helping to diversify the economy beyond traditional sectors and boost employment. Private sector expansion. Continued improvements in the business environment and credit access are supporting private sector activity and investment, including foreign direct investment inflows. Inflation and monetary conditions. Stable price environment. Inflation in Tanzania has been moderate and well contained, around low single digits, and is expected to remain within the Bank of Tanzania's target range of roughly 3% to 5% into 2026, supporting stable consumer demand and investment planning. Ghana's economic outlook for 2026. Many international forecasts project real GDP growth near or above approximately 5 to 6% in 2026, which is competitive within Africa's growth landscape. A Deloitte estimate sees approximately 5.7% GDP growth in 2026, driven by mining, especially gold, services, and export expansion. Fitch Solutions forecasts approximately 5.9% growth in 2026, helped by easing inflation and stronger consumption. Multilateral lenders like the African Development Bank also project approximately 4.8% growth next year under stable conditions. Inflation and stability improvements. Inflation has fallen from double digits to closer to target ranges, supporting stronger private consumption and investment conditions. IMF support and macroeconomic policy. Ghana is progressing under its IMF extended credit facility with improved macroeconomic stability, including single-digit inflation and stronger reserves, which bolsters confidence for 2026. These are the growth drivers. Mining, especially gold, and services are key contributors to growth. Value and currency and gold management is reducing reliance on IMF. Policy initiatives like the 24-hour economy program and accelerated export strategies are designed to boost manufacturing and trade competitiveness. Ghana is also targeting substantial job creation in infrastructure, agro-industry, and digital sectors in 2026. Uganda's economic outlook for 2026. Uganda's economy is expected to deliver around 6.5% to 7% real GDP growth in 2026, building on recent expansion in agriculture, industry, and services. This positive outlook is reflected in official projections from the Uganda Investment Authority, which foresee broad-based expansion across the economy. Oil production could trigger a further jump. Government plans and the National Budget Framework Paper project that GDP growth could reach double digits, approximately equals 10.4%, in the 2026-27 financial year, driven largely by the commercial commencement of oil production. If realized, this would mark a significant acceleration in output and foreign exchange earnings, with major positive implications for investment and public revenue. For reference, real GDP expanded by about 6.3% in FY 2024-25, with stable inflation approximately 3.5%, and broad contributions from agriculture, industry, and services. Here are the key growth drivers for 2026. Agriculture and agro-industrialization. Agriculture remains a core driver of growth, with rising productivity and export performance feeding into agro-industrial value chains. Commercial oil production. Uganda is poised to begin commercial oil output from key fields, e.g., Lake Albert, in 2026, which is expected to be a transformational driver for growth, government revenue, and investment. Foreign direct investment. Strong investment flows, especially into extractive industries, agro-processing, and infrastructure, are bolstering capacity and employment. Infrastructure and strategic initiatives. Government initiatives like the Parish Development Model, MUGA funds, and infrastructure projects are expanding productive capacity and market access. Stable macroeconomic environment. Uganda has maintained low inflation, approximately 3.5%, and a relatively stable exchange rate, supporting consumer demand and investment planning. Ethiopia's economic outlook for 2026. Ethiopia's government projects very robust growth, about 8.9% in the 2025-26 fiscal year, which runs from July 8, 2025 to July 7, 2026. That's slightly up from approximately 8.4% in the previous year, underpinned by stronger investment and economic reforms. The World Bank forecasts around 7.2% GDP growth for Ethiopia in 2025-26, signaling continued solid expansion, supported by improved agricultural productivity, high electricity output, and favorable commodity prices. Although this is lower than the government's own projection, but still strong relative to regional averages. Economic analysts such as Fitch Solutions expect GDP growth of roughly 7.2% in 2026, following approximately 7% in 2025, driven by ongoing reform momentum that attracts investment and boosts output. United Nations analysis calls on Ethiopia as one of the key drivers of Africa's overall growth in 2026, particularly in East Africa, where growth could exceed continental averages. Here are the key economic drivers in 2026. Ethiopia's current economic strategy includes IMF-supported reforms, such as foreign exchange liberalization, debt restructuring, and opening markets to private and foreign investment, which are intended to boost confidence and productivity. Export revenues have been rising, supporting GDP growth. Infrastructure projects, power, logistics, and structural change further strengthen competitiveness. Agriculture remains a huge part of the economy, and improvements in productivity help underpin broad expansion, while industry and services contribute to diversification. Ethiopia is launching massive infrastructure investments, such as a $12.5 billion airport project slated to support trade and connectivity in the long term, beyond 2026. South Africa's economic outlook for 2026. Multiple reputable forecasts suggest South Africa's real GDP growth in 2026 will be modest, roughly 1.3% to 1.6%. This reflects continued recovery from very weak growth in earlier years as structural reforms slowly take effect. The OECD projects approximately 1.3% growth in 2026 as reforms and eased monetary policy support activity, even as demand stays subdued. Other institutional forecasts also see growth in the approximately 1.4% range for 2026, reflecting cautious recovery amid lingering constraints. Some economic data compilations estimate approximately 1.5% for 2026. Growth is positive but below high-growth peers in Africa, largely due to structural bottlenecks and subdued investment. Inflation and monetary policy. South Africa's inflation has been low by recent historical standards, and the Reserve Bank's new inflation target is 3% plus or minus 1% by 2026. Recent data show inflation remains within or slightly above this band, approximately 3.5% to 3.6%. Because inflation is near target, the South African Reserve Bank, SARB, has room to cut interest rates further in 2026, which could support borrowing, investment, and consumption. Here are the main growth drivers. Government reforms, especially Operation Vulindlela on power, transport infrastructure, and logistics aim to reduce long-standing supply bottlenecks and improve investor confidence. A recent credit rating upgrade by S&P reflects progress on fiscal credibility and structural efforts, which can help lower borrowing costs and attract investment. Multilateral financing, such as a World Bank loan for infrastructure and green energy projects, is helping tackle key constraints in transport and power sectors. So there you have it, a snapshot of Africa's economic powerhouses and their 2026 outlook. Nigeria is expected to grow steadily with stronger services and agriculture. South Africa shows modest recovery but is slowly regaining stability. Kenya benefits from private sector growth and a resilient agriculture and service base. Ethiopia continues to expand rapidly, fueled by investment and structural reforms. Ghana is stabilizing with promising GDP growth and fiscal reforms. Tanzania remains one of East Africa's fastest-growing economies, supported by infrastructure and investment. Uganda's 2026 outlook is positive and above average for the region. Africa is rising, and 2026 is shaping up to be a year of opportunity for investors, entrepreneurs, and policymakers alike. Let's hear your comments on this, and don't forget to subscribe for more topics on Africa.